Hey, good morning, everybody. It's Wednesday, June 24th, 2026. I, of course, am Hammer, founder of Hammer Solutions, home of great products to help my originator friends get more loans, such as Originator Success, Grab and Go Social, and Rate Sensei. So today's lock advice: rates are at the better end of the range, but it's tough to expect more improvement. Consider locking anything inside of 30 days. Stick around. We'll talk about why that is the case. But if you're here this morning, say good morning. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, broadcasting on Facebook and on YouTube. If you would like to join me live and you want a quick reminder on your text messages so you don't miss a moment of the show, sign up to get those at hmmr.io/reminder. Or use this cool QR code over here. If you're on your phone right now, take a screenshot, go back to your photos, press and hold that QR code. It should load up for you. Also, remember, you can get a copy of our written email lock advice at www.ratelockadvice.com. We send that out each and every weekday morning. Here is what it looks like if we take a look at today's. Hold on a minute, and I will fire that up because I'm feeling fiery. So let's go ahead and show you what that looks like here. There you go. All right. So this is what you are looking at if you want a copy of the written lock advice so that you can reference it through the day. Get that to your inbox each and every weekday morning, absolutely free of charge, ratelockadvice.com. Also, you can go ahead and sign up for our text alerts at www.ratetextalerts.com. $7 a month. Can't beat them. You should join them. Check them out for sure. All right, everybody, let's go ahead. Say good morning if you're here this morning. If you're watching the replay, do me a favor. Give me hashtag replay in the comments. Let me know that you were here. Welcome to all the live folks. Good to see all of you. Yes, thank you so much to have all of you here. And let's go ahead and get started. We'll jump in. Let's start with the technicals. I'll show you what we got going on this morning. Let me bring up that screen, and here you are. So taking a look, the reason we are seeing better rate sheet pricing this morning is that mortgage-backed securities currently up 28 basis points to start the day. You can see that here in the chart, that jump up, the way that this has moved up like that. That is the reason you are seeing better pricing this morning. 10-year Treasury yield, 4.42, 4.43, well below that 4.5 mark that we've kind of seen it capping out at. Also should catch your attention. So let's go ahead and do a quick recap of what happened yesterday. And let me refresh the page so it scrolls over. All right, so taking a look at what happened yesterday, everything here in front of this dotted line, as you see. So yesterday was a very calm day. Pricing came out at 10 a.m. We ended the day basically exactly the same as where we were when pricing came out. According to Matt Graham over at MBS Live, he says that trading volume was very low on the day. We tend to see that in the summers, and it is summertime on Wall Street. So lower trading volumes will do that to you. And that's kind of what we saw. So there was, of course, no need for any reprices yesterday. As far as rate sheets today, they're going to be better. We're going to see improvement, and that's all because of what we've got going on this morning, everything in front of here. So you could see this part of the line right here, before 8 a.m. So we had overnight improvement, and then at 8:20 when our markets opened, right here, you could see that, and we've seen quite a bit of improvement since then. So this jump up, we ended the day yesterday at 100.10-ish. And now we're 100.38. So that is up 28 basis points. What 28 basis points looks like on a rate sheet, basically that's going to put us back to kind of 6.58-ish here. So right now, yesterday, we ended the day 6.65. We fell a little bit from that 6.6 mark, but still not much, putting us right back to kind of where we were, 6.58, arguably even 6.56 if they want to price a little more aggressively this morning. In the scheme of things, you're not really seeing rates move on this. It's barely even enough to argue that you could arguably price an eighth of a point better on rates, if you wanted to. if you tweak the rebate pricing. Most of the moves today, you're going to see more along the lines of what is affected by rebate pricing rather than on actual rate sheets themselves. And it's important to note, take a look here over the last month, the lowest number that you're going to see so far is 6.54 right here. And as we go down, we've got 6.54 as the winner. So we have 6.56, we have 6.58, we have another 6.58, we have another 6.58. Today, I think it's going to be 6.58. We're at that best point of the range, and you see that with the technicals here as well. When we go back and take a look at this, looking at the technicals, you'll see that mortgage-backed securities, this is today's coupon right here. This is the candlestick, and you will see this red line. That's the 50-day moving average. Now, remember, this giant red candlestick where things got worse, this was the Fed meeting last week when we saw things kind of change and drop down, bringing us near that lower end of the range. But when it comes to improvement, we did see a day that was a little bit better the Tuesday before the Fed meeting on June 16th. But overall, you see that we're testing that 50-day moving average on the technical here, and that we are also kind of capping out where we have capped out in the past. If I make this a little bit smaller so we can see more of it on the screen, you could kind of draw a line. Let's go ahead and do the arrow just to get a cleaner line here. You can kind of draw a line that our best level was right about here anyway. So what that means is there's arguably a little bit of room right here for things to improve. But I don't know that we're going to see much of improvement on that. So keep that in mind. As far as reprice risk on the day goes, it's low. It's not likely that we see things lose ground. And again, the lock advice is down at the bottom of the screen. We are at the better end of the range when you look at rate sheets, when you look at the technicals. I would be locking in. I was locking yesterday, so we would have arguably left a little bit of meat on the bone, a little bit of food on the plate. Why are we seeing this improvement today? That's a tough one, man. When you look at the headlines, there's really nothing clear as to why we're seeing the improvement today, right? So arguably, let's take a look at some of the headlines here. You can see that, this headline is, come on, click onto that. There we go. Oil extends a drop as more tankers cross Hormuz after the peace talks. Now, a couple of days ago, everything was saying it was going to take, a couple of months to ramp back up to where we were at. When you take a look here, though, we're seeing arguments that things are moving much faster, right? Oil falls below $75. Again, that's Brent crude pricing as more ships cross Hormuz. WTI oil is always a little bit cheaper. That's the American oil. But Brent, falling below $75, notching its lowest level since before the U.S.-Iran war. I still don't call it a war. It's a conflict. We never declared war. Oil prices fell as concerns over disruptions to shipping through the Strait of Hormuz eased. Trump urged the Department of Justice probe into fuel prices, accusing oil companies. This was just a Truth Social tweet where he said, hey, prices aren't coming down fast enough, and, I'll have to do something like this. Don't read too much into it. And if you understand how things work, gas companies, will oil companies take advantage? Absolutely. But the price at the pump there's a lot more mom and pops. There's a lot more small franchises. It's not like some big conglomerate that's setting prices, and they've got more expensive oil in their tanks. They've got to sell off what they've got before they're going to necessarily drop prices. It's how it works. They raise prices quickly. They tend to lower them a little bit slower, but most people are seeing oil, seeing prices at the pump drop, quite a bit. So also, again, what is the Department of Justice who are they going to go after? International benchmark crude futures for August fell to its lowest level since before the U.S.-Israeli strikes on Iran. So the main thing here, WTI is at $71. Brent crude, 74.73. What does it look like when we go to CNBC and look at oil futures right this second? Let's just refresh this to make sure that's 73.55 is what it was showing. Let's just take a look there. Yeah, so 73.52. But if we take a look at where it was at yesterday, is it enough to warrant this big move lower in bonds? Not really. I don't. Yesterday it was at it was at 77, closed at 77. So you're down about $4. But the day before that, let's see, 77, 77, 80. So I mean, we saw that move here, and we didn't see a big drop, right? So it's been there. We are seeing continued moves lower here with the pricing, but I think that a lot of this is just some kind of normal stuff. What we haven't seen change, the Fed futures have not changed. Expectations of a Fed rate hike at the next meeting as high as the about a third, 30-ish, 35% expectation that we could see a rate hike. Now, tomorrow we're going to get PCE inflation data. We're going to get the final GDP numbers for the first quarter. You're going to get jobless claims. Is any of that going to be enough to change this? Probably not. We know the PCE data is going to come in hot. It'll probably come in at expectations, but we know there's been continued inflation. The CPI data that came in showed continued inflation. So as far as that goes, I don't think we have to worry too much about this changing and about that raining on our parade. But again, taking a look here, you can see it in the technicals right here. You can see the 10-year also testing the 50-day moving average. Remember, this one goes down, not up. So it's testing the 50-day moving average here, which is at 4.43, 4.44. So at the moment, slightly better than that. But I think that we'll see some, we've seen this right here, this line. Nope, that's a little more crooked than I want it to be right there. So we've seen a line in the sand anyway, and it's very unlikely. We haven't seen since April. We haven't seen those numbers go down, and they're probably not going to go down anytime soon. Remember, if we hadn't seen this big shift in Fed rate hike expectations, we could argue that we'd see things move lower. When the Strait of Hormuz opened, I was calling that we should see rates drop an eighth to a quarter point, and we really didn't see that. And I think the reason we didn't see that is because of the Fed meeting last week, and the fact that markets are now pricing in Fed rate hikes, meaning they think inflation is going to continue to be a problem. So until they can squash it down, so it just doesn't look like a lot of improvement here. If you got anybody out there, today's a great day to lock. I think we're close to capping out. Rates are at the better end of the range. I'll throw that up here one more time just to show that one. Again, we're at that better number. If we see today at 6.58 or even 6.54, 6.56, these were the best numbers that we saw. But 6.58 shows up a lot as we go through these last few weeks. And here was 6.59. Arguably, it could be 6.58, right? So, it's just, I don't think we're going to see much improvement. So that's what we got. Friday, you've got consumer sentiment data. Otherwise, it'll close out the week. There's not a lot of writing out there that we're going to see rates improve. Next week, we got jobs data. Remember that we got jobs data coming in next week. So let's see what you guys have to say. Talk today of 2 additional routes through the strait that will help supply. Yeah, I could throw it back on the screen, but I was reading the one article. The International Energy Agency, the IEA, was saying that oil from the United Arab Emirates, the UAE, was coming in at about 85%. They estimated 85% of what it was pre-Iran conflict. So oil is, as it continues to tick up and improve, that's an arguable about why it'll be. But oil, when we look at it where it was before the Iran situation, let's go ahead and share the screen and take a look at that together real quick. Let me load this up. If we take a look at this together, before all of the stuff going on there, let's just shrink that down a little bit. Look at where we were at a little bit more. Let's shrink it down. So here you go. In February, at the end of 2025, we were at like $60, $61 a barrel. In February, we were still close to 70. We're really, it's almost back down 73 versus here. It's such a small difference. You're talking, $5 to $6 a barrel from where we were in February. I remember February 27th is when we saw the best rates. And look at where oil was. It was at $70 a barrel. It was a few dollars cheaper. So there's really an argument to be made. There's really not much room for this. And when we look at February 27th, when we look at rate sheets, let's go back up to this. Let's go to this happy chart here. We'll turn, actually want the 30-year fix. We'll turn everything else off and we'll shrink that puppy down. Again, February 27th, that was when we were at our lowest rates here, 5.99, according to this here. Look at how much higher we are now. So Oil prices have dropped back down, but we didn't see rates just, all of a sudden just go boom and drop all the way down to here, because expectations are we're going to see inflation, the, speculation of Fed rate hikes. That's our new rate normal. I think we see rates in the mid sixes. I had forecast already that I didn't think we'd get any better than what we saw in the middle of April here, these best levels here, kind of around 6 3/8. And right now you could say we're at 6.5, 6 5/8. It would be nice to get another 3/8 in rate improved, but even that, there's nothing that really points to that happening. So keep that in mind with where we're at. Randy said he filled his Suburban at $3.04 a gallon yesterday. That is fantastic. Again, we're seeing pricing at the pump drop down. Some areas more than others as well. There's always that. So keep that in mind. WTI dropped below 70 for the first time. Psychological benefit. Yeah. So National Praline Day. Pralines. Is it praline like a pecan? I'm not quite sure. What is a praline? I'll have to Google that one. Not sure, quite sure. Does anyone have a favorite dish with pralines? I don't even know. Is pralines on like ice cream? Isn't it like, are they sweet? Is it a sweet nut? I'll have to look. Pralines, kind of the redheaded cousin of the nut world. You always see cashews and almonds, pecans, peanuts. Pralines, not really a big thing. Ron says, no rate hike if no inflation. Warsh has his focus groups for cover. All of our inflation is coming from energy, and by the end of the year, the energy savings will be reflected in inflation data. Probably sooner than that, even. It'll be sooner than that. And you say all of it is coming from the energy. There's still tariffs. There's still stuff. I don't know. We'll see. But I think inflation could ease down for sure, and it should ease down. But we'll see. Corporations be greedy. But all right, my friends, I'm going to wrap it up. Thank you for joining me. A couple of things before I go today. Remember to sign up for a text reminder so you can be reminded that I'm going live so you don't miss a moment of the show. hmmr.io/reminder, or use this cool QR code. Don't forget to sign up for our free email lock advice, www.ratelockedvice.com. Check out our text alerts at ratetextalerts.com. Go find out how we can help you get more loans at Google and social media from originatorssuccess.com. Got some really cool new things coming out on our Originator Success platform I'm excited about. So get in now, go check those out and see, it's, again, I'm very transparent. It's about $300 a month that you can get in for it. And, who's got that kind of money to spend? Well, if it's making you thousands a year, that's why you should have that money to spend. It's, writing little checks to cash big checks, as Carl White said, and that's where I remember that coming from. So definitely check that out. If you want something even a little bit cheaper to help you get business from social, if you want to get more loans from social media, check out Grab and Go Social at grabandgosocial.com. Pre-created content, customizable content, coaching, and community for less than $100 a month to help you get loans from, all of the online social media platforms. Check those out for sure. So, all right, my friends. Well, thanks for joining me today. Hopefully you'll join me tomorrow. I'll see you then. Same bat time, same bat channel. Have a great one. Bye-bye.